Welcome back to my YouTube channel, Price Action Framework. Stop trading every shooting star you see. A perfect-looking shooting star that can still fail at the wrong location. The real question isn't, is this a shooting star? The real question is, where did it form? Today, we'll look at one of the strongest resistance locations in price action, role reversal, also known as change of polarity, where old support becomes new resistance. Let's break it down. In the previous lesson, we learned one important rule. A shooting star alone is not enough. A candlestick only tells us what happened, but location tells us where it happened. A stronger setup happens when structure and location come together. In other words, a shooting star plus a key resistance location creates a higher probability setup. But here's the important question. What makes a location even stronger? Confluence. This is when multiple resistance factors point to the same price area. For example, channel resistance, horizontal resistance. When these levels overlap, we call it a confluence zone. Now let's look at a real chart. Notice this area. This is a confluence zone. The shooting star didn't appear randomly. It formed exactly where multiple resistance factors came together. We have upper channel resistance, horizontal resistance, 61.8% Fibonacci retracement, all overlapping around the same price area. This creates a stronger resistance location, and this is why location is so important in the price action framework. But here's the next question. What happens when a strong support level breaks and price comes back to test that same level again? Does that level disappear, or can it become a new trading opportunity? That's where today's concept begins, role reversal, also known as change of polarity. Have you ever noticed this? A price level supports the market again and again, but after price breaks below it, the same level later rejects price. Why does this happen? This is called role reversal, also known as change of polarity. The idea is simple. A broken level doesn't disappear, its role changes. The area where buyers once defended can become the area where sellers step in. The old floor becomes the new ceiling. Old support becomes new resistance. Now look at the retest. Price comes back to the same level, but this time it gets rejected. And notice what appears at this new resistance, a shooting star. This is the confirmation we look for, because in the price action framework, we don't trade a candlestick alone. We trade the rejection at the right location. Now let's take this one step further. Because in real trading, the best setups usually don't come from just one reason. They happen when multiple factors come together. Look at this chart. At first, this was an important support zone. Price tested this area multiple times, and buyers kept defending it. But then something changed. Price finally broke below the support. But remember, we don't immediately chase the move after the break. We wait to see if price comes back and retest that level. Now here's the important part. When price came back to retest the same area, it failed to break higher. Instead, price was rejected. The old support has now become new resistance. This is what we call role reversal. But don't stop there. Look carefully. This rejection happened exactly where the upper channel resistance was located. So now we have role reversal resistance plus channel resistance, both pointing to the same area. This creates a confluence zone. And what appeared right at this zone? A shooting star, a sign that buyers tried to push higher, but sellers rejected the move. Now look at the whole chart. Have you noticed something interesting? Many shooting stars appear around important resistance areas before a reversal happens. But here's the key difference. We don't chase every shooting star we see. We only focus when it appears at an important location, because a shooting star alone is just a candlestick. The location is what gives it meaning. In the price action framework, structure gives us the signal, location gives us the probability. Now the question is, we already found the right location, but how do we know if the rejection is strong? Remember, resistance is not always a perfect line, it is a zone. So we don't enter just because price touches the level. We wait to see how the market reacts. Look at this example. Price came back to the role reversal zone, but notice what happened. For several candles, buyers tried to push higher, but they couldn't break above this resistance area. We start seeing smaller candles, doji candles, and shooting star patterns, all appearing around the same zone. This tells us something important. Buyers are losing momentum, and sellers are defending this resistance zone. This is the sequence we want to see: break, retest, rejection. Remember, we're not looking for one perfect candlestick. We're looking for the story behind price movement. The stronger the rejection, at a high probability location, the more meaningful the signal becomes. Now, let's zoom into this rejection area and connect everything back to our price action framework. Remember, a high probability setup needs more than just a candlestick. First, we look at the structure. Look what happened here. Price tried to push higher, but for almost 5 days, buyers failed to break above this resistance zone. During these 5 days, we started seeing shooting stars, doji candles, long upper shadows, and multiple rejection candles. So what does this tell us? It shows that buyers are losing momentum, and sellers are starting to take control at this resistance zone. But remember, structure alone is not enough. A rejection candle in the middle of nowhere doesn't give us a strong setup. We also need the second piece of the puzzle: location. Where did this rejection happen? Exactly at the role reversal zone. The old support has now become new resistance. And even better, this area also aligns with the upper channel resistance. So now we have structure plus location plus confluence. This is what creates a higher probability trading setup. But notice something else interesting. This rejection area also lines up with another powerful location, the 61.8% Fibonacci retracement. This is another key level that many traders pay attention to. But Fibonacci is not just about drawing random levels on your chart. The real skill is knowing where to draw it and how to combine it with price action. And that's exactly what we'll cover in the next lesson, where we'll break down Fibonacci retracement step by step. So if you want to understand price action beyond just candlestick patterns, make sure to subscribe to my YouTube channel, Price Action Framework, and I'll see you in the next lesson. Before we end this lesson, remember one important mistake many traders make. They see price return to an old support level and immediately think, this will become resistance. But remember, a retest alone is not confirmation. Price can still break back above the level. That's why we wait. We wait for the market to show rejection. This could be a shooting star, a long upper shadow, or multiple rejection candles. Sometimes, price may even test the same resistance area more than once. And that's completely normal. Because what matters is not just the retest. What matters is the reaction. The level gives us the location, but the rejection gives us the confirmation. A strong role reversal setup follows the process: break, retest, rejection. Remember, don't predict the reversal. Let price confirm it. A shooting star alone is not a complete setup. But a shooting star, at the right location, with strong rejection, becomes a higher probability setup. And this brings us back to the main idea of the price action framework. Price action is not about memorizing candlestick patterns. It's about understanding the story behind the market. Remember, don't just look at the candle, understand why the candle appears at that location. In the next lesson, we'll continue breaking down more high-probability price action locations, including Fibonacci retracement, moving average, measured move completion, and psychological resistance. So if you want to master price action step by step, subscribe to Price Action Framework, and I'll see you in the next lesson.